Hey guys, how you doing? Hope you're well. It's Alessio. Now, one of the most common questions I get from subscribers and from traders is this, which is, what is a really good way, what is a powerful way to understand the markets? What is a powerful and actually simple way to read a chart and understand what's going on in the market? Okay, and I think you will agree with me that actually is a very good question. So what I found through my research over the last 5 years is that one of the most powerful, useful, and actually quite a simple method to understand the market is what's called Elliott wave theory. And I also learned that some of the best traders in the world are using this methodology called Elliott wave theory. Now, I should just say that if you had asked me this question 5 years ago, I would have given you probably a different answer. I became a convert to Elliott wave theory. The bottom line is this, guys. There are many people out there. There are some folks out there who probably don't like Elliott wave theory. And that's okay. I understand that. Everyone will have their own methods. Everyone has their own ideas and principles. That's okay. But let me just say this. I found through my research that a lot of the people out there who don't like Elliott wave theory, and I was one of them myself 5 years ago, is because they truly don't understand it. And that's not their fault. It's because there's actually a lot of misinformation about Elliott wave theory. A lot of people actually have the wrong idea about what Elliott wave theory is. I'm actually going to try my best to explain it to you quite simply in this video. But let me just say this, that if you've heard about Elliott wave theory, and if you don't like it, it's probably because you've been given the wrong information about it. Okay, so let me just say that I'm going to do my best to clarify it for you, and not just in this video, but also in a webinar I'm going to do at the end of this month. And let me say something else. Over the last 2 years, I've been working and researching on building my own Elliott wave indicator. So as you can see on my chart, these numbers you see on my chart is my own Elliott wave indicator. It's called LT Intelligent Elliott Waves, which I'll be releasing at the end of this month. It'll be released by the end of November. All right, guys. But essentially what I've done is I've created this wonderful, indeed powerful indicator here, which just plots for you. It just shows you on the chart immediately where the most probable Elliott waves are. All right, guys. Now, in case some of you are asking, well, what the heck is this Elliott wave theory? Okay, let me explain it to you as simple as I can. So take a look at this. Now, imagine you had a map in your hand, all right? And this map had one word on it. The word was one town. And this town, as you can see here, says Grindelwald. Okay, that's it. That's all you had. A map that said Grindelwald, and that's all you had on the map. Now, in case you've never heard of Grindelwald, that's okay. I'd never heard of it before a month ago. And the reason is this town, Grindelwald, is a place I'm going to for Christmas. Apparently it's in the Swiss Alps, obviously in Switzerland. And I've been told it's a wonderfully beautiful and a quaint place for going to for skiing and things like that. By the way, I'm not going to go there for skiing. I couldn't ski for the life of me, by the way. I'm just going to go there for the fresh air and the scenery. But the bottom line is this, guys. Imagine you had a map that just said, it just said this, Grindelwald. That's it. And you had no other information. Well, you're probably asking, well, how can that help me? How is this useful? You're probably saying, well, where is north? Where is south? Where is the nearest major city? Where are the nearest major roads? And by the way, what you need is context. That's the big key word right there. You need context. You need to have more information. So what do? You need a better map. So what you need to do is zoom out. So I'm going to zoom out here. So you have more information now. So now you have information that Grindelwald is just under this lake. Okay, that's still not enough. Obviously, I've told you it's in Switzerland, but imagine you know where you are. So you want to zoom out. And okay, so now you can see that Grindelwald is actually to the south of Zurich. So Zurich is to the north, northeast, and you can see that it's also to the west of Geneva. All right, so now you have more information. So what you've done here, guys, is you've got more context. You have information as to where you are on this map. All right, you know the major cities, you know your relationship to these major cities, and also if you zoom out a bit more, you can see that actually you can see where Switzerland is. You got France over here, you got Germany to the north, and all that, and so on and so on. Okay, now zoom in. I'm going to zoom in a bit more here. Now, if we zoom in, we can see where we are in relationship to the nearest objects around us. So we can see that we got the nearest roads, the nearest mountains, and the locations and things like that. All right. So the bottom line is, guys, that just like when you have a map in your hand, you need to have information as to your surroundings, and you're trying to find your way around. It is the exact same thing when you're looking at a chart. Okay, because when you look at a chart, you're asking yourself, okay, what does any of this mean? What's going on here on this chart? What is the bigger picture? Are we still in a downtrend, or are we starting a new uptrend? What's going on here? What's likely to happen next? What is the most likely outcome in the next few days, the next few weeks, and so on and so on? So Elliott wave theory, just like a map, a very good map, gives you an idea of the context of where you are in the big picture. So let me explain a bit more to you about this. One of the most important principles in Elliott wave theory is that markets trend in 5 waves. Okay, so markets move in the direction of the major trend in 5 waves or 5 sections. Elliott wave theory also says that the majority of corrections, that most corrections, are formed of 3 waves. These waves are called A, B, C, as you see here in my chart. A, B, C. Okay, now that's not so important right now, but just to understand the 5-wave part and so on and so on. Now, how does this help us? The way it helps us is when you look at a chart, when you want to try to read the market, understand the market, what you really need to have is some context. Okay, so you look at a chart, you're saying to yourself, okay, so where are we in the big picture? What's going on here? Okay, and when you look at a chart, it begins to make more sense to you when you look at the Elliott wave counts. So for example, if I know that waves 1 and 2 have completed, then I know that we're potentially in the start of wave 3. And if we're in the start of wave 3, Elliott wave theory says that we're in the strongest part of a trend, okay? Because wave 3 is usually the strongest, most dynamic part of a trend, okay? And the way that's useful is this, because if I know that the beginning of a new trend is started, so for example, take a look at this chart right here. I can see immediately by just looking at the Elliott wave counts on this chart, and again, these numbers you see here are the Elliott wave counts based on the Elliott wave indicator we've created, which again will be released by the end of this month. So if I know that with a high degree of probability, we have completed wave 5, okay, if I've completed wave 5 here on this chart, then if I see that we're in the beginning of a new potential wave 1, 2, and 3, then this is the start of a potential new upward trend, okay? And again, if I know that we're in a wave 3, in a probable wave 3, then I also know that this could be the strongest part, the most dynamic and the strongest part of this upward trend. And by the way, one thing I've done in this indicator is I've color-coded the wave 5s so that when it's magenta, when the color of wave 5 is a magenta, it means there's a higher probability this is a wave 5. Now, let me show you another example of how Elliott wave theory can be useful. If you know you're potentially forming a wave 4, so let's say you know with a high degree of probability that you're in a wave 4, that means that there's another wave coming, that this is not a start of a new uptrend, that there's a new wave potentially going to start to the downside, called a wave 5. And how is that useful? Because if you look at a chart, well, take a look at this. As you can see here on this chart, this rally here was a likely wave 4. As you can see here, wave 3, wave 4, okay? And what does that mean? It means if this rally here is a wave 4, then we know with a high degree of probability that this rally is not the start of a new upward trend, that the downtrend is not finished, but actually there's very likely going to be another wave, a wave 5, to the downside, okay? And that's going to be our likely wave 5, as you can see here. All right, guys? So that's one of the beauties of Elliott wave theory. Now, let me just talk about some of the objections. Some of the most common objections that you get about Elliott wave theory is, for example, well, isn't Elliott wave theory subjective? Isn't it possible for 2 different people to have different wave interpretations? Yes, absolutely. That's true. But that's one of the reasons why I wanted to create this indicator, to remove some of the subjectivity around Elliott waves. But actually, there's something important that you should know, which is that almost every indicator, almost every methodology out there is going to be subjective. Okay? Even something as simple and objective as moving averages on a chart, they can also be subjective. Why? Because different people can interpret them differently. All right? Moving averages can be subject to different interpretations. Okay? And in fact, many people will use different kinds of moving averages to suit their own interpretations. So remember, nothing out there, no indicator, no methodology is going to be a 100% objective. There is subjectivity in almost every indicator. Even chart patterns can be subjective. But actually, there's something very important I found through my research, which I want to share with you. I found that the more subjective something is, the better actually it can be, the more reliable it can be. Let me explain. People think that if something is objective, then therefore it's more useful, that therefore it's more reliable. Not true. Because you see, high-frequency trading algorithms designed by institutions, they are programmed to deliberately manipulate the objective things you can see on a chart. For example, take moving averages, or take support resistance, like previous levels on a chart, okay? Previous lows and previous highs on a chart. Guess what? High-frequency trading algorithms that are designed by institutions can easily manipulate these levels. In fact, these algorithms are often designed to deliberately manipulate these levels. Which means what? The more objective something is, like moving averages or support resistance, guess what? These levels can easily be manipulated by algorithms designed by institutions. However, the beautiful part is that algorithms cannot easily manipulate Elliott waves. Okay, in fact, it is extremely difficult for algorithms to manipulate something like Elliott wave theory. And the simple reason is that algorithms are not sophisticated enough to be able to do that. So one of the most beautiful and powerful things about Elliott wave theory is that it needs a human brain to calculate it. It needs a human brain to interpret the chart. The good thing is that these indicators now I've developed, the Elliott wave indicator I've developed, can actually make things a lot easier for you by calculating the wave counts for you. But the bottom line is this, guys, that Elliott wave theory, because it needs a human brain to interpret the chart, actually is better than majority of other indicators out there, purely because of the fact that high-frequency trading algorithms cannot easily manipulate them. All right, guys, just to let you know that I'll be releasing this Elliott wave indicator towards the end of this month, by the end of November, and of course, I'll let you know about it when the time comes soon. And we're going to do a webinar on this with more special information for you as well. Thanks very much indeed, and I'll see you guys in the next video update.